All right, good morning, afternoon, everybody. How we doing today? If I can just get a quick audio and video and see my screen, I'd sure appreciate it. You just type it right there in the questions box to let me know that we are all good to go. Oh, thank you guys. I appreciate that. So hope everybody's having a great day. We've got definitely got some market volatility last night and today. As you know, the most of the actual futures markets were closed yesterday for the day of mourning for President Bush's memorial service. I watched that yesterday, and very nice service, and all kind of news coming out as well. So we've got definitely some moves going on here, and so definitely, again, love the capitalist products of Nadex when trading these type of markets. So if you've been with us the last couple of weeks, or the last couple of months, actually, we talked quite a bit about Nadex spreads, and we kind of went through a little bit of a cycle about spreads, and then we did a little comparison. I told you that, this week, starting this week and for the month of December, we're going to kind of swing back full circle and focus a little bit on Nadex binaries. For those of you that have been around, this might be very elementary, but again, it's always good to go back and cover the basics. So, what we're really doing here is we know there's a lot of new people that join us on these webinar cycles. And so we're kind of cycling back through. What we like to do is kind of start with, the foundation and then kind of build from there. So what we're going to be talking about today is Nadex Binaries 101, and going to make it very, elementary here, kind of just hold you by the hand and walk you through it like that you have no idea what a Nadex binary is. All right, so that's what today's webinar is. It's kind of start with the basics of binaries, kind of 101, and then, I believe next week we're going to jump into a little bit more about choosing the right binaries. Today is going to understand what they are in general and how they work in general. Then next week we'll talk a little bit about, okay, now there's a bunch of different ones at different pricing. Why would you want to choose one over the other? Why do certain ones fit different strategies? And then after that, foundations laid, we'll talk a little bit about some different ways to trade them, some different strategies, stuff like that. So glad you're with us here. Stick with us over the next few weeks as we build on this, okay? So let's get our disclosures knocked out here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Also, guys, today I'm going to be showing you quite a bit on the Nadex demo platform, and I'll show you how you can get a demo account here in a moment. But anytime we're on a webinar and you see me enter an order on the demo platform, that's not trading advice or a trade recommendation by any means. That's me just simply helping you visualize what it is I'm trying to teach you today, or just trying to walk you through how to actually use the platform. Okay, but it's in no way a trade recommendation. And as always, past performance is not indicative of future results. So if you are brand new to Nadex, hop on over to nadex.com. And you can get quite a bit of information just right here on the home page. Basically, Nadex offers two different products. They offer binary options and call spreads. Okay, today we're going to be talking about binary options, but you can go through both of these tabs here and get some great information on each product and how they work. You can go through some of the contract specs to understand, the different contracts and expirations available. Right here, trading platforms. You can go directly to the online platform. They've got a mobile application, but right here, trading demo trading platform. Nadex will give you a free $25,000 demo account. All you got to do is fill out some quick information here and hit open practice account, and you'll get an email, you'll actually be able to just log right in. But once you get into the Nadex demo account, it's a great place to go in and get familiar with Nadex, get familiar with all the different contracts that they offer, the different expiration times, see all the different strikes, and a good place to, especially if you're new, but I still use my demo almost every day to practice new things and test new things. Or if I'm trying to master a new strategy or system, I know that there's going to be some trial and error in that, right? And it's a pretty expensive place to use your live money to practice. especially if you're practicing something new. So get a demo account, utilize it. Nadex gives it to you for free, and it's a great place just to work out all the kinks, master new strategies and system, make your mistakes in demo, master it in demo, become profitable in demo before you move over to your live account. So definitely take advantage of that. I got to give Nadex a lot of props. They do a lot for their members with, a lot of these free tools. You've got charts within. I'll show you that in a moment. You've got, charts and indicators inside of the platform as well. Here under Learning Center, you've got all kind of videos and Q&As, and you can go right here to webinars. And a couple things. There we are right there. There's my ugly mug. We're on this webinar right now. But right here under upcoming, this will show you all of the upcoming webinars. So you can sign up and get registered for those, get reminder emails for those. You'll see right here, like I just said, today we're covering Binaries 101. Next week we'll talk about, are you choosing the right binary for your strategy? Like I said, we'll talk about the different ones that there are and why to use different ones. And then later in the month, we'll talk about a particular strategy, collecting premium with Nadex binary options. Then in January, we'll talk about a few other strategies and ways to use binaries. So make sure to get signed up for these webinars. They're free. If you've missed any webinars, or if you want to, I know a lot of you are like, I don't want to wait a week for more. Give me more, give me more. No problem. All you got to do is go over here and click on demand, okay? And then scroll down and find me right here. My name is John Skelton. I'm with Apex Investing, and you can click it right there. And here is a recording of all kind of webinars. All right, you can go through here and watch basics videos, watch, you can just see them here, collecting premium, trading part-time and at night, volatile markets, basics of spreads, how to trade news events. Go back to the next page, how to trade out of the money binary. There's a ton of information here. You can just go through and watch them. Okay? So we love having you on here with us on these live webinars. Be sure to sign up for those, but you've got a wealth of information here that you can just go and watch one right after the other, and just dig in. Like going through those seasons on Netflix. When you binge watch them, you can go through and binge watch these on the weekends, the evenings, anytime you want. So, also today's webinar is being recorded. This is where the recordings go, is under the on-demand section. So if you ever miss something, or you come in late to one of these, or you want to jump ahead, whatever you want to do, it's right there available for you. Okay? So again, my name is John Skelton with Apex Investing. We appreciate Nadex having us on today. Nadex has us educators come on these webinars just to give you free information, free education, to help you understand who and what is Nadex. What are some ways you can trade them? How can you implement the Nadex products into your existing trade plan? And we're just here to kind of share with you some ways that we trade them, and give you, some insight to what we do and some education. And that's what Apex is. We're an education company. We've got over 25,000 members. We're traders just like you. We trade Nadex binaries and spreads every day. We have strategies and systems and indicators and live trade rooms, ton of stuff over at Apex. Feel free to check us out, apexinvesting.com. You can get a free username and password to get in, and check out some information, some free education there as well. I've been with them now for about 5 years as head of operations. I've got a background in banking and as a stockbroker, and like I said, I'm a trader just like you, and I myself trade Nadex binaries and spreads pretty much every day. So I'm going to go back to the very beginning here, and what I always try to do. 5 years now of trading Nadex and educating people on Nadex, and I try to do my best to simplify things. And you'll see sometimes that I don't give you all the biggest, fanciest graphs and charts and colorful starburst slides here. Okay, I try to bring it down to you on a basic level. I think back to when I was new. Where was I confused? What did I not understand? And when I was brand new trying to get the grasp of basics, I really didn't care about how fancy somebody's chart was or their slides were or in colorful graphs. That confused me more, And if you've been on my webinars, I try to keep it very basic, and I try to keep it very step by step, and I'll repeat myself a few times to make sure you got it. but to show you on a chart how you can practically use it. If it's not something that you can't get off the webinar and practically start using right then, what's the point? You know what I mean? Why are you going to take an hour out to listen to something that you can't do anything with? And so I strive very hard to make these things clear for you to understand and give you usable information that you can use immediately. Okay? So, very, very basic today. What's a Nadex binary? How do they work? What markets can I trade? What's the value of a binary? Well, let's just kind of dig in, all right, to the very, very basics. So, some benefits of trading Nadex binaries. You don't have stop outs, you know, which helps you prevent, you know, you have limited defined risk, and you know what that is before you ever get in a trade. So that prevents problems with market whipsaws. What do I mean by whipsaw? If you're brand new, what does that word mean? Well, you know, that's when the market just whips. That's when the market just flash crashes, goes crazy, right? Just in a matter of seconds or minutes, just flies hundreds of points, and it could fly against you, okay? And if you're trading, you know, futures or spot, you know, spot forex, you know, you have technically unlimited risk, you know, when something flies against you like that. With Nadex, you do not have unlimited risk. You have capped defined risk, and doesn't matter what the market does against you, you cannot lose more than that defined amount up front. And your risk is the amount that you put up to enter the trade, all right? And you can do one contract, you can do 100 contracts. But binary options are short-term, fast-moving contracts with only two possible outcomes at expiration. All right, at expiration, a binary contract is either worth 0 or worth 100. That's it. It's binary. You know, it's binary, 0 or 1, true or false, yes or no. Did it happen or did it not happen? Okay, it's a true or false statement. At expiration, the statement, the event either did happen or it did not happen. Okay? Some of you are like, I'm already lost. I don't get what that means. Well, let me pull the platform back over here. Okay, let me show you live on the platform here, on the demo platform. And then we'll go back. So if I'm looking at the Nadex platform here, I see indice binaries, I see forex binaries, I see commodity binaries. Okay, so indice, what does that mean? Well, that means stock index. Okay. You know, so we've got some overseas indexes, you know, the Chinese stock market, the London, the German, the Japanese. Right here we've got the 4 main U.S. indices, right? The NASDAQ, the S&P, the Russell, and the Dow, okay? We've got 10 different Forex pairs in here, okay, that all have binary options on them. We've also got commodities, meaning oil, gold, natural gas, silver, right? There's corn and soybeans as well. So there's a ton of different markets, but if I go to each one, let's just click Wall Street 30, which is a derivative of the Dow, okay, the mini Dow. So right now I see that, you know, I've got some different expirations here. I've got some binary options that open at 11 a.m. and they expire at 1 p.m. Got some new ones that open at 12 p.m. and they expire at 2 p.m. By the way, any times listed that you see on the Nadex platform are Eastern time. We've got some that expire at the end of the day here at 4:15, and then some that expire at the end of the week. Meaning if it's Monday, I've got some that expire on Friday, right? So I've got new ones that come out like every hour while the market's open. I've got end of day, I've got end of the week. And there's even some 20-minute binaries down here on the U.S. indices, right, that expire every 20 minutes. These expire at 12:20. Some new ones will open up at 12:20 that expire at 12:40. So there's always tons of different options and tons of different expirations. And if I just go back here and click these 2 o'clocks or even 1 o'clock coming up here, inside of that, you'll see that there's a bunch of different contracts that expire at 1 p.m. This is called the Nadex strike ladder. If I click this expiration right here, these open from at 11 a.m., they expire at 1 p.m. So if I click this, Notice I've got all these different numbers in here. What is this? Each one of these listings right here is a binary option contract. Okay? Over here, you see the offer and the bid. The offer is the price that I can buy it for. The bid is the price I could sell it for. Notice they go, all the way down. There's a ton of different options. Well, what is a binary contract? Okay. Well, let's just each different one of these numbers here. These are called strike prices. See this? 24,575, 24,563, 24,551, and so on. Each one of those is a different binary option contract. If I was to click any one of these, it'll open up a ticket. What does this statement right here say? All a binary contract is, it's simply a statement. This statement says the Wall Street 30 will expire greater than 24,539 at 1 p.m. today. Okay, now again, Eastern time. So all this statement is the Wall Street 30 will be greater than 24,539 at 1 p.m. That's it. Meaning this market will be above this price at 1 o'clock. Yes or no? True or false? If I think that statement is true and the statement will happen, then I would be looking to buy. I'd be interested in buying, and which is the offer. And if I click that right there, notice it marks this as buy, and it automatically tells me down here, okay? Well, my max loss is $36.25. My max profit is $63.75. If I add these two numbers together, what do they equal? $100. Okay? They'll always equal $100 because at expiration, the contract's either worth 0 or it's worth 100. Okay? So whatever I buy it for, see, like right here, if I bought it for $30, the most it can be worth at expiration is 100. So the maximum I can profit is $70, right? If I'm wrong and the market does not expire greater than 539, the most that it would then be worth 0, right? So if I bought it for 30 and it expires at 0, what's the most I can lose? 30. Okay? So any binary option contract here on Nadex is simply a statement. It says the Wall Street 30 will expire greater than this. If I think that will be true, I want to buy it. If I think that will be false, I want to sell it. Okay? So I can go either way, saying, I don't think the Wall Street 30 will be higher than that. I think it'll be lower than that. My chart's telling me it's going the other way. My strategy system says going the other way. So I don't want to buy it. I want to sell it. And if I'm right and expires below that, then my sell order would expire in the money. And notice there's all kind of different pricing here. I can buy way down here at $12, $36, $42, all the way up into the 80s and 90s. Okay? Kind of if you imagine a 0 up here and 100 down here. And notice there's all these different contracts. The reason there's different prices is because there's different levels to say yes or no, it will be or won't be above that. Okay? So, Kenneth, I'll show you that here in just a moment. Okay? So that's just a brief overview on the platform itself. Now let's go back to very, very basic here. Okay? And let's just look at it this way to help you understand it. If we buy one Nadex binary at $25, okay, so again, if we're buying, then we're going long, meaning we think the market's going up or we think a statement will be true, right? So if I buy a binary at $25, my maximum risk is $25. That's the most I can lose, which means $25 will be pulled out of my account and put on hold while I'm in this trade. So if I buy for $25, okay, if I look down here and imagine at expiration, it'll either be worth 0 or it'll be worth 100. So if I'm wrong and it expires at a value of 0, well, I bought for 25, it's now worth 0. I lost 25 bucks. If I'm right and the statement happens, statement expires true, and the position settles worth $100, then my maximum reward is $75 because I bought it for 25. It expires worth 100. Okay, so the amount you buy the binary for is the amount you risk. This risk amount is the money you're putting up on hold out of your account to place the trade. The difference between what you buy it for and $100 is the maximum amount you can make. Does that make sense? This one screen right here. Are there any questions? Type it in now. Are there any questions about this one screen and this one aspect? At expiration is worth either 0 or worth 100. Wherever I buy it at in between there, the most I can make is the difference of where I buy compared to 100. The most I can lose is the difference of where I buy compared to 0. Okay? Now, let's look at this same example again of going long, meaning market going up. We want to buy. We think the statement will be true. If I buy a binary at $75, okay, at expiration, okay, now we can get out before expiration. We'll talk about that in a minute, like Kenneth asked about. But at expiration, the binary is either worth 0 or it's worth 100. So if I buy it for $75, the most I can lose, my maximum risk is $75, right? Because if I buy it at 75, it expires worth 0, then I lost 75 bucks. The most I can make, I buy it at 75. The most it could ever be worth at expiration is 100. So the difference there is 25 bucks. So if I buy it 75, my maximum risk is 75. The most I can make is 25. If I bought it at 25, the most I can lose is 25, and the most I can make is 75. So does that make sense on the buy side? Okay? Whatever the price is you buy for, that's your maximum risk. That's the amount you put up to get in the trade. And the most you can make is the difference of where you buy and 100. The most you can lose is where you buy and 0. Okay? Binary contracts are actually pretty simple in the way they work. At expiration, it's yes or no. It's 0 or 100. Okay? Now that you understand that, let's talk about the short side. Okay? Because remember I showed you here on the platform. If I think the statement is true, I would, be interested in buying it. Okay? I'd be interested in buying it. If I think the statement is false, meaning, nope, I don't think the market will be greater than this. I think it'll be less than this. I want to sell it. Okay? I can go either way. So how does it work if I want to sell? Well, it's the same thing. At expiration, the binary is either worth 0 or 100 in value. But it just works the opposite way. Let me show you here. If I sell a Nadex binary at 75, if I sell it at 75, okay, because I'm wanting the market to go down, right? Well, my risk is the difference of where I sell compared to 100. Remember, on the buy side, my risk was where I buy down to 0. on the sell side, the risk is where I sell up to 100. So if I sell it for 75, my risk is only up to 100. So how much am I risking? $25, right? Okay, it's the opposite of the buy. So my maximum risk is $25. My maximum reward, if I'm right and the market expires underneath the strike price, the most I can make is where I sell down to 0. So my maximum reward would be $75. So the amount that you sell a binary for is the actual amount you could make. So if I sell it for 75, the most I can make is 75. All right? So when you sell a binary, the maximum amount you can make is the price you sold it for. The difference between what you sell for and $100 is the amount you put at risk. Okay? The risk amount is the amount you put up to enter the trade. So in this case here, if I sold at $75, my risk is where I sold at 75 up to $100. So my risk is 25 bucks. So the amount that would be taken out of my account, put on hold while I'm in this trade is 25 bucks. When that trade closes, if I'm wrong and it was a loss, then I lost 25 bucks. If it expires and I was right, then I'm going to get that $25 back plus the $75 that I made, put into my account. Make sense? Any questions on this slide that's right in front of us? Do you see how the sell side is just the opposite of the buy side? Either way, the value of a binary at expiration is 0 or 100. Just the difference of what you risk and what you could potentially make is the opposite on buying and selling, right? Because on one side you're comparing it to 0, on the other side you compare it to 100. So whether you're buying or selling. Okay, and you can watch this again if you need to, get that down. But here's the very nice thing. If you're ever confused, all you have to do is open a ticket and say, okay, if I click buy side, okay, so my maximum lot, okay, so if I'm going to buy it for about 40, the most I can lose is 40, the most I can make is about 60. Got it. If I click sell side, okay, so my maximum loss is 68, the most I can make is 32. Great. It will literally show you right here before you ever place the order. So if you realize, oh no, I got that backward, okay, like it literally shows you right there. Your max loss, your max profit, your max loss, your max profit. And that helps you remember, right, I'm doing this one between here and 100. Okay, I'm doing the other one from where I get it and 0. Got it. It's kind of a, just built-in extra feature there for you, which is so awesome because it lets you know ahead of time. You know exactly the amount you're risking. You know exactly the most you can lose. Doesn't matter if the market flies hundreds of points against you. That's still the most you can lose because it's capped, known, upfront known risk before you ever get in the trade, and it's listed out right there for you. Okay? Great feature there and great feature of the product itself. So let's look at one other short example here. So again, if we're selling, if we, again, at expiration, we're 0 or 100. So if I sell at 50, okay, my maximum risk is where I sell compared to 100. So my risk is $50. The most I can make is where I sell down to 0. So in this situation, it's 50-50. Maximum risk, maximum reward. Okay? So let's just look real quick here. Okay? I'm going to dig in a little deeper here. So this example here of the euro dollar. Okay? This particular strike price right here, this statement says the euro dollar will expire greater than 1.0 1161 at 3 p.m. Okay. Well, I can buy this for $77.50, or I can sell it for $72.25. This is the buy price. This is the sell price. Okay. Some people say, well, why is there a difference between these prices? Well, this is what's called the bid-offer spread. Anything you trade has a bid-offer spread, futures, forex. What does that spread mean? Well, there's market makers that are there to provide liquidity. What do I mean by liquidity? Well, if we go back over here, so we see these different strike prices. Here, this is the price I can buy it for. The bid is the price I can sell it for. Notice right here, bid size 50. That means there's 50 contracts available at that price. Over here, offer, there's 50. Okay, now look, if we open up a ticket, okay, sometimes you'll see other levels in there too. There's quite a few contracts available is what I'm saying. And market makers are responsible for making a market there, providing liquidity, providing contracts available for you to trade. Okay? How does a market maker make their money? Well, they're just a middleman. They're just simply saying, hey, okay, you can buy from us at $77.50. We'll buy from you at $72.25. So they're just providing liquidity, right? How do they make their money? Well, they're going to buy from you at 72, turn around and sell it to someone else at 77. So those few dollars of bid-ask spread in there, that's how they make their money. But that's how it works in any market. There's a liquidity provider that he'll buy and he'll sell, right? Provides liquidity. Okay? All right, so that's why there's a difference of price in there. That's how it works in any market, you know, futures, options, forex. So, but if you look at these two numbers, okay, if you look at these two numbers, you'll see 77.50 and 72.25, okay? Now, okay, there's multiple market makers, okay? Market makers do not work for Nadex. They're a separate, you know, these other market makers that are out there, okay? Nadex is not the market maker. Nadex does not trade against you. Nadex is an exchange. What Nadex is there for is to bring buyers and sellers together, okay? On Nadex, you're trading directly with the exchange, okay? They are not trading against you. Market makers are not trading against you. Market makers are just providing liquidity. Now, yes, sometimes there's contracts out there that are just from other buyers and sellers, right? Okay? Some are through market makers, all right, to make sure there's liquidity there, okay? But they don't know, are you getting in, are you getting out, are you getting in for profit, are you getting out for a loss? They don't know. It's just simply a quote. Here's what we'll buy for, here's what we'll sell for. It's just a quote. They don't know if you're getting in or getting out or what's going on, okay? It's just a providing of contracts to buy and a place to sell, okay? So I want to talk to you a little bit about pricing here, okay? Kenneth says, well, how does Nadex make its money? Well, Nadex makes its money. They're an exchange, so you pay exchange fees on each order, okay? So they make their, Nadex makes their money completely off of transaction fees, okay? And, you know, you've got basically $1 each way, okay? Like if you buy a contract, there's $1 fee. If you sell a contract and get out of that for profit, there's $1 fee. It's just on the transactions. All they're doing is providing you as an exchange. They're providing a meeting place for buyers and sellers, and they simply are making money off the exchange fees when a transaction happens. Okay, make sense? So, something very important here. Binary options are options, okay? And the pricing of a binary option has to do with the probability factor, okay? Let's take a look here. I'm not talking about strategy and system. I'm not talking about charts. I'm not talking about where the market is going. I'm talking about just based on a pricing probability Black-Scholes, what's called a Black-Scholes model. Okay, options are priced based on a probability. If I look at the bid and the offer, okay, if I look right in the middle, what's right in the middle? If I added these two numbers together and divided them by 2, okay, well, the midpoint would be about $74.87, right in the middle between these two prices, okay? So from a pricing standpoint only, a pricing model, at this point in time, okay, the pricing model shows a 74.87% chance the binary will expire above the strike if I were to buy. Okay? If I were to sell, all right, if I were to sell, okay, it's showing there's a 74% chance that it will not expire below the strike. Okay, you can look at the bid and offer and figure out the midpoint pretty quickly. You don't have to be to the tick, you know, and that shows you the probability of pricing, okay, for the buy or sell side. 74% chance this will expire in the money. 74% chance it will not expire out of the money. Why? Why does it work that way? Okay, well, now again, can that change instantly? Like if your chart's sitting there showing you everything's turning south, all your indicator turns to all of your, you know, entry system indicators saying, hey, we're about to go short. Absolutely. But the pricing model is not taking that into account. The pricing model is not taking into account what's going to happen. It's right now, as of right now. Why is that? Notice this right here. It's called the Nadex Indicative Index. Okay? And you can go over on the Nadex platform and you see it right here. The Indicative Index. This is the current market. This is the Nadex Indicative. Okay? This is what, you know, everything is based on at Nadex. Whether this expires above or below is based on this number right here. Okay? And the Nadex Indicative basically looks at the last, you know, at expiration, or in the way it's settled as well, it basically looks at the last 25 orders, takes out the highest 10, the lowest, the highest 5, the lowest 5, and then averages the remaining 15. That way it protects you against little spikes, okay? So it could be a tick or two off here and there sometimes from what you'll see on a chart, okay? But that's how it works. So the indicative price is what determines, you know, yes or no, okay? Point is, look at what does this statement say? The euro dollar will be greater than 1.1161 at 3 p.m. And this thing expires in an hour and 1 minute. Okay? So what it's saying is the market will be greater than what? 1161. Where is the market indicative right now already? It's at 1165. It's already greater. Do you see that? This is very important. Do you see this? The statement says it'll be greater than 1161. It's already at 1165, so it's already greater. So as long as it stays greater than 1161 until 3 o'clock, what's going to happen? This will expire being worth how much? Who can tell me? Will it be worth 0 or will it be worth 100 at expiration? Statement says it's got to be greater than 1161. It's already at 1165. So as long as it just stays above 1161 between now and 3 o'clock, it expires worth $100. Okay, So you see that? This is what's called an in the money binary. We're going to talk more about these next week. The statement's already true, right? So as long as it stays true until expiration, it'll expire worth $100. So since the statement's already true, notice there's a higher probability for this contract to expire in the money. Also, you're paying a little more for it, aren't you? Does that make sense right there? Let's look over here. What about this one right here? What does this statement say? Wall Street 30 will be greater than what? 24,587. Where's the market now? 542. So right now we're at 541. If we're going to say it's going to get all the way up to 587 and stay above it, the market's got to move quite a bit in that direction, right? Notice how it's priced so much lower. Therefore, it's a lower probability of that happening, right? Just based on where it is right now. Based on where the market is right now, it's a lower probability that it's going to make that big move up in 17 minutes. Do you see that? Guys, does that make sense? Why that's priced lower and why it's a lower probability? Also, why it's a lower risk, higher reward. But it's a lower probability. It's only about a, 28% probability based on pricing that it'll happen. Because the market's down here at 549, you're saying it's got to get up to 587. You see that? Now what about down here? Why is this one priced at 77? The same expiration time in 17 minutes. But this says the market will be above 515. It's already at 556. All this statement is saying is it'll expire above 515. It's already at 553. It's already way above it. So see where it's priced at? $74, because it's a higher probability. So yes, technically it's a higher risk and a lower reward, but the statement's already true. Does everybody get that right there? Okay, does that start to make a little sense why some are priced real low, some are priced around 50, 60, 70, 80. Imagine a 0 up here, imagine 100 down here. And there's a bunch of different strike prices. Okay, so does that make a little bit of sense? How a binary works, it's worth either 0 or 100. Okay, there's a bunch of different strike prices. And based on where that contract strike price is compared to where's the market now, is going to determine the probability and therefore determine your risk and reward on the trade. Make sense? Okay. So, but also notice, let's say that we did buy one of these down here at about $30. Okay. And the market starts to go up in our favor. Well, the value of that binary will probably also be going up as well, right? We bought it for around 30 and maybe now it's worth, 50 and then 60 and then 70 and what if we don't want to hold it all the way to expiration? Okay, let's look at these over here instead. Right here. Okay, so let's say we bought this one for about $30. And then it's, it's worth 30 something, and then 40, and then 50, and then 65, 70. Let's say I don't want to hold it all the way to expiration. I don't have time. I've got to leave. Or, hey, the market was going in my favor. It's going up in value. I'm making profit. But now I see the market slowing down. And it could go against me. Okay? I can exit then for profit. I do not have to hold it all the way till expiration. I can buy for 30 and get out at 60 or 70. I can do that and make 30 of profit. I don't have to hold it to expiration. Okay? Or what if I buy at $77 and then the market starts going against me? Now it's only worth 65 and 50 and 43. Well, hey, I know if I bought it for about 75 bucks, I'm risking 75 bucks. And if I see it start to go against me and now it's down worth like 35, maybe I just want to get out and take a $40 loss instead of a 75 full loss. Does that make sense? So I can hold it till expiration and let it be worth 0 or 100. Or I can exit early, whether I'm exiting for profit or I'm exiting to limit a loss. Okay? Now, just as a quick demo, this is not trading advice, whatever. Okay? Not a recommendation. I'm just showing you how this works. Let's say that I wanted to buy this contract, and I opened it, and I said, all right, I want to buy it. I want to buy one contract, place the order. What just happened? I placed the order. It's in my open active positions right here. Okay? So I bought this contract right here, 24,579. I got an hour and 12 minutes left till expiration. It expires today. Here's the date and time I entered the trade. Average price. That's the price I bought it for. I bought at $51.25. See this position? It says +1. The plus means I bought. If I had sold, it would say -1. Okay? So this contract, 24,579. Where is it up here on the strike ladder? It's right here, 24,579. So right now, there's an offer side and a bid side. The offer side is what I can buy it for. The bid side is what I can sell it for. Remember? What does it say right here? $69, $68.50, 60. You see that? See right here where it says current market, 66, 66.50. Notice this matches this. Because remember, I bought this contract, right? So if I want to get out of it, what do I have to do? If I bought something, I want to get out of it early, I got to sell it, right? Well, for this particular contract, the 579s, what is the current market price I can sell it for? 59.75, 59. See, this number changes as this number changes. Does that make sense? If you buy it for a certain amount, you want to know, okay, what can I sell it for? Well, what is the current market? So down here, if I bought it for 51, I can sell it for 68. So my profit or loss is what? That's how it's determined, guys. That's how all this here at the bottom works. Whatever I bought for, what can I currently sell for? So therefore, what's the profit or the loss? And over here is that Nadex indicative. Okay? That makes sense. So, right now, just as an example, I'm up $16.75, $14. What if I want to get out of this? How do I do it? Well, notice here, it's in my open positions. It's an open contract. All I have to do is click it. A ticket automatically pops up marked what? Sell. Because the platform knows I'm in this position as a buy. If I'm clicking it to want to get out of it, the only thing I can do is sell, right? Okay? So I click it. It's automatically marked sell. I can do a market order and place order and just get out right now. Okay? Kenneth, I think it was you that asked earlier, how do we get out early? How do we liquidate before? Just like that. That makes sense? Let me show you again. If I were to buy a contract, okay, or sell a contract, either way, it's right here in my open positions, okay? If I want to hold it to expiration, let it be worth 0 or 100, I could do that. If I want to get out early, whether I'm making money or losing money, I just click it, market order, it's already marked sell, and I get out and it's gone. Everybody see that? Pretty simple? Okay, let's look at one other example. If I had sold a contract, so now in my open positions is a sold contract. Remember what I told you? When you sell, it's marked what? -1. Okay, I sold it at 67.25. Currently, okay, the market, currently I can buy it back at $81, $80.25. So it's showing me the profit and loss. If I want to get out of this contract, I click it. It's automatically already marked buy, because that's how I'm going to get out of the sell side. I place order. It's done. See that? Okay. So, guys, we're running out of time here. I've gone a little bit over, but that is a kind of first Nadex Binaries 101 kind of basics walkthrough. That's how a binary works. That's how the value of a binary works. That's why they're priced the way they're priced, based on where the market is compared to the strike price. We're going to talk a lot more about that next week. I'm going to go through and really break this down with you to help you understand why there's so many different ones, why the prices are different, and why you might want to choose one over the other for particular strategies. We're going to dig in a little deeper, okay? But that's the basics of what is a binary, how does it work, and the basics of how you enter and exit an order on the platform. Okay, so I hope that was helpful to you, especially any of you that are brand new. Make sure to hop on over to nadex.com and get signed up for the upcoming webinars and get reminder emails about the webinars. Also, feel free to visit us over at apexinvesting.com. If you have any questions over there, we've got some free education, strategy systems, Nadex binary and spread scanners, all kind of helpful stuff. Definitely make good use of that. Hope you have a good rest of your week and great weekend, and we will see you next week on the next webinar. Thank you so much, guys. We'll talk to you soon. Have a great one.